Welcome back to the channel, everybody. It is Friday. But wait, I know we're celebrating this Friday, but did you see what Chainlink was doing? Did you see what Songbird was doing? Oh, things were looking real good. Yeah. We're going to begin here. We have some XRP news today. We have some Bitcoin news today. We have some terrible banking news. Oh, man. It's good for the new financial system. Hbar news, Chainlink news. Did I say that already? Silver news. Oh, there's a lot of stuff looking good the last few days. I might say so myself. All right, so it's a good day. Can you tell? Anyway, so this first article begins as such. It is titled Ex-Federal Reserve Employee Discusses Ripple and XRP's Role in U.S. Public Policy. It begins as such. A former Federal Reserve official calls attention to the role Ripple and XRP play in shaping the crypto public policy scene in the United States. Now, this person's name is Greg Kidd, and they say Greg Kidd is a former senior analyst. Senior analyst means they know what they're talking about. They know their stuff. Senior analyst at the Federal Reserve Board for Payments. It says he discussed this while speaking at the just concluded XRP Las Vegas 2024 conference. Kidd, who also served as an early Ripple employee, commended the firm for how far they have come, which says a lot considering they've done a lot with being under fire from the SEC. Imagine how much more will be done in just a short time when we're done with all of this SEC nonsense. It says, in his remarks, the Nevada Congress candidate emphasized that he first heard about Ripple while working at the Federal Reserve, noting that the San Francisco-based payments company, which at the time was an emerging one, caught his attention due to its promise. Quote, I did go from working for the Federal Reserve, which was the deep state, to a poker game with other deep state players like from Google and Visa. And they talked about this new company. So Google and Visa, he just told a lot. Google and Visa were talking about Ripple. But we know Visa has a lot of bank coin ties. Visa also at one time, I don't know if they're continuing to do this, but Visa has deep ties to Hbar through FIS. And Visa has ties with Stellar through a company named Tala. If you remember years ago, Tala was one of the companies that was building on Stellar, but also working with Visa. I can't remember to what capacity. I think it was cross-border payments, but I think they're one of the companies that, sort of put fees on top of the technologies that they build. So you don't get that cheap XLM pricing like usual to send your money back and forth. They're going to throw some on top of it, but that's how they make money. But anyway, I'm just saying Visa has ties to a few bank coin companies. It says, and they talked about this new company. There was no Bitcoin company, but there was a company called Ripple, unquote, Kidd remarked. It says, according to him, Ripple's module was similar to the Bitcoin ledger at the time, but included two more columns on the spreadsheet, with one of these columns dedicated to the issuer and the other for the currency. He expressed gratitude to two of the XRP ledger's original architects, Arthur Brito and David Schwartz, for taking time to educate him on the future. Now we get to the role in shaping public policy. It bears mentioning that Greg Kidd joined Ripple as a chief risk officer in 2013. He disclosed that at the time he discussed risk management and compliance with Chris Larsen. So this shows you how much more foolish this SEC stuff really is, that they had someone from the Federal Reserve advising them, working for Ripple on compliance, and yet the SEC still will go against this type of individual who's former Federal Reserve worker and say, oh, no, they're not compliant. Really? It says Ripple's executive chairman, however, Larsen was doubtful of the necessity of this effort, as Ripple had no compliance issues then. Let's see if they have any more here. It says they talk about the lawsuit a little bit. It says, commenting on the current reality, Kidd expressed pride in Ripple's role in shaping the public policy in the U.S., especially in the crypto scene. Multiple industry commentators have identified Ripple as being at the forefront of the fight against regulatory uncertainty, of course. All right, so now let's move on here to some Bitcoin news. And this article is titled We're going to hear from Mr. Willie Woo. This article is titled Bitcoin Rally in Coming Months, quote, will be one for the record books, says on-chain analyst Willie Woo. Here's why. Then they go into how many followers he has on Twitter. Of course, they always begin like that. According to Woo, the ensuing Bitcoin rally in 2025 will be, quote, one for the record books, unquote. The on-chain analyst says that the rally will be driven by an increase in global liquidity, which typically favors risk assets. Quote, global liquidity forming a bullish ascending triangle. And he has some nice charts here. An ascending triangle typically forms when an area of horizontal resistance is continually tested, while higher lows are consecutively being formed. A bullish ascending triangle is confirmed when a breakout above the horizontal resistance occurs. In response to a post by the pseudonymous quant analyst Plan B that the price of Bitcoin appreciates drastically between 2 to 5 months following the halving, Wu says that the 4-year event triggers a reorganization among Bitcoin miners, leaving only the fittest to survive. The fourth Bitcoin halving took place on April 19th. Quote, inefficient miners get culled at the halving. They dump their Bitcoin before dying. Only the strong ones survive. They operate on fatter margins, so don't need sell. And then we're going to leave off right there with that one. Let's move on here. So here we go. Now, this is some really, really good information when you're thinking about the new financial system and the weakness of the legacy system, that because of their weaknesses are going to need the new financial system even more. Keeping up with bank failures is something you definitely want to do. We definitely have done it here. Now, we've heard from this individual. I believe we reported on this individual last week, Barry Sternlicht, the billionaire, who was saying that they expect one bank at a certain point, one bank to collapse per week. We'll see if that actually happens. But we know, based on reports from real experts, that at least 300 banks are at risk. Now, this is what Sternlicht is saying here. I'm going to give you this information, which is actually quite eye-opening. And I'll tell you why in a moment, but let's read this a little bit here. It says, speaking to CNBC, Sternlicht predicted that the United States would witness one bank failure every week. Now, that's the part we know. Here's the part that's interesting. Specifically, he stated that more than 4,000 regional and community banks in the country would be at risk due to high interest rates and inflation. 4,000. Now, this is why I said this is interesting. Now, we read 2 reports this year. Here on the channel, we covered these articles saying at least 300 were at risk. Last year, we read an article saying about 300 were at risk. But there was an article came out. It was around springtime last year, right after the banks, those banks collapsed. And there was an article from a company, and they were saying, remember they said it was like up to 600 banks. Remember that? There was a few said 300. There was one article said 400. And then there was just this one article that was like, no, about 600, around 600, maybe more than 600, something like that. I'm paraphrasing. And yet we never heard that number again. So now that this individual, who's a billionaire, right, that's relevant, is stating more than 4,000 are at risk. This billionaire, I not for 1 second believe that this man is speaking without his advisors first sitting him down and giving him a rundown on the reality of the situation. And his advisors have to be some of the best paid. And if they're the best paid, I'm going to assume they're good at what they do. All right. And if they're sitting him down, if what I'm saying is correct, and they're sitting him down privately and saying, hey, listen, there's a lot of banks at risk here. We have to give it to you straight, sir. And then he's coming out. They don't know he's going to do these interviews. He does what he wants. But he goes on TV. He's doing all these interviews because he wants to ring the alarm. He's probably concerned. He shouldn't be. But if he knew about the new financial system, I don't know if he does or not, he wouldn't be concerned. He'd be celebrating. But maybe he doesn't. And so he's coming out and warning everybody, hey, listen, this is what's going on. And he's telling the public what they told him in private. Is that possible? You think it's possible? I'm not saying that's what's happening. I'm just considering the possibility. Why say 4,000? Everybody else all the pros are saying 300, 400. At least that's in range. Even 600, at least that's close. Those are close together. 4,000. I'm just considering possibilities. But nonetheless, if we boil everything down, what it really comes down to is a lot of banks are at risk and in trouble. Period. That's what everybody is in agreement on. Even though I've been saying that for years. Now we're starting to see it come to fruition. 4,000. If that's not eye-opening and shocking, I don't know what is. And what was the other place recently? There's somewhere else. I read an article the other day. I was just glancing over it, and somewhere else was having problems. It was Cuba. I think it was it Cuba, where their banks shut down. I don't know why that occurred. I'm gonna look a little deeper into it. Their banks shut down and everybody's money went just poof, just disappeared. At least that's what I'm reading. I have to look at some follow-up articles to see if that's legit. Like, did their money come back? What's going on with that? They can't just take everybody's money. But then I'm considering, do they have buy-in clauses over there like the United States has? Keep that in mind too. Banks go down. Don't forget not buy-in. Sorry about that. Bail-in. Don't forget about that bail-in. The FDIC, sure, that sounds good. FDIC, up to a point. They insure up to a point, and their capital is limited. Very limited. Did they hit the limit last year? Right? So the FDIC can't do everything. And not all deposits are FDIC insured either, which is the bulk of what's at risk. And do most people really keep up with what deposits are FDIC insured and which ones are not? I don't think most people do. But if that doesn't help, then there's the bail-in, where they take your capital and your bank accounts and savings accounts as the bank's own to use. It's not yours at that point. So I'm keeping that in mind as well. We'll see how everything works out, but this puts the new financial system, self-custody wallets, custodying services by non-banking financial institutions, fintechs as well, in the driver's seat. It also puts, I'm going to tell you right now, it also puts money market funds, not money market accounts. It puts money market funds in a good spot. It puts CDs accounts in a good spot. It puts gold in a great spot. Puts silver in an amazing spot, which we'll get to that a little bit later. We have some commodities news today. All right, so I just wanted to get that out of the way. 4,000. All right, let's see if we hear some more stuff about this later to either go against this number or support that number. We shall see. So now, Chainlink. Yeah. Choo-choo. Jump on the link train. Not financial advice. I'm just saying I'm very happy with what Chainlink has been doing. This article here is titled, Chainlink pumps 18% after Wall Street pilot with JP Morgan, BNY Mellon, and the DTCC. I told you these people needed help. Oh man, JPM coin. Listen, nobody wants to use their systems. Nobody. Their system's so limited and weak, they had to come to one of the utility coins. And Chainlink is at the forefront right now as far as interoperability. You got Chainlink, you got Quant, you got Flare, you got Songbird. That's the big four when it comes to interoperability right now. Flare has Google Cloud, and Quant has the Bank of England and Nexi and Bank for International Settlements. Chainlink has Swift. Now they have all these other big timers here. Yeah, the interoperability protocols are cooking and looking solid for the future, in my humble opinion. But it says this, we reported on this DTCC thing here yesterday, but now we see the results of it. Just hearing about it, boom, there was a pop. DTCC announced it had just concluded a tokenization pilot with Wall Street giants like JP Morgan, BNY Mellon, leveraging Chainlink CCIP. But that's not what's important here in this article. This is what's important. Chainlink's token soared as much as 18.8% after DTCC, the biggest settlement and clearinghouse in the U.S., announced it had just concluded a tokenization pilot with Wall Street giants like JP Morgan and BNY Mellon, leveraging Chainlink's CCIP. So now we have another bank coin, another one of our utility coins, doing big things. Hbar. This article is titled, Hbar takes over Qatar with $50 million in digital assets venture studio. It says, New account creation booms on Hbar's chain after Qatar signs a strategic partnership to build a digital asset studio. I think they had a little bit of a typo there. It says Hedera Hashgraph is known to make a strong case for adoption via the variety of partnerships the blockchain's company has established. A month ago, Hbar received a powerful boost when BlackRock's money market fund went live on Hedera's chain. The Hashgraph Association, an independent nonprofit organization, has made huge strides toward bringing this unique blockchain's capability to a national level via partnerships with government institutions. In February 2024, the Hashgraph Association struck a 5-year deal with the Ministry of Investment of Saudi Arabia. It's getting deep, folks. In February, Saudi Arabian government invested $250 million in the project to build the deep tech venture studio in Riyadh. By doing so, it aims to leverage advancements in artificial intelligence, quantum computing, virtual reality, and more. Let's scroll down here. Let's scroll past the tweet. It says, this time, the Hashgraph Association has entered a deal with Qatar, one of the world's richest countries. With a $50 million development fund, the Hashgraph Association is trusted to build a digital assets venture studio to rapidly accelerate the research and development of the digital financial landscape. Qatar's Digital Assets Lab within the QFC Innovation Dome supports the new Digital Assets Venture Studio as part of Qatar's, quote, National Vision 2030, unquote. Moreover, the Venture Studio by Hbar tends to focus on building bankable, decentralized finance solutions. According to Yusuf Mohammed Al-Jada, the chief executive officer of Qatar's Financial Center, this new partnership is, quote, instrumental in advancing our efforts in developing and launching innovative projects that establish the country as a financial and commercial hub by 2030, unquote. And they're very smart as well by choosing Hbar. See, Hbar's Hashgraph, with their gossip mechanism, and I mean, their advanced scalability. Remember, Hashgraph is far superior to blockchain, far superior in technology. Their smart contracts are insane. The speed is insane. I mean, the capabilities of it. I don't know if they're going to max everything out at the beginning. I don't know, but I just know the capabilities are much greater. Yeah, big stuff happening with Hbar and Hedera. But we've been believers for a long time. This has been one of our bank coins for a long time. They've been building. And I think now, finally, the connections that they have are starting to show. There's a reason why they get the call from one of the richest countries in the world, right? They could have called anybody. And don't get me wrong, Ripple and XRP have deep ties in the MENA region, deep with some of their banks, right? Atajari, Wafa, QNB, just to name a few. So people don't think I'm just talking. I know we have a lot of new people here. And you can look that up, okay? And I'm trying to remember who else has deep ties in the MENA region. I believe it was Quant also. Quant also has some ties there, although they've been very, very quiet on those developments. It says the venture studio will last 4 years and complete the initiative by 2028, empowering local businesses in Qatar. The Hashgraph Association contributes 20% of the $50 million fund, providing local startups and businesses with tutoring, engineering, financing, and development services. We're going to stop right there on that one. What is this article here we have? Okay, so now we have a little bit more banking news. Let's see if this article will actually pop up. This article is titled, Bank of America Forecasts an Upturn After the Worst Performance for 30-Year Bonds in Over 100 Years. Whoa. The 30-year is the, quote, obvious, unquote, pain trade, says strategists. The total return on 30-year bonds has declined by 45% since April 2020, the worst 4-year loss in over 100 years. According to strategists at Bank of America, that rough 30-year performance has come amid inflation that even after some cooling is still well above the Federal Reserve's target, as well as a wave of government spending. Emphasis on that. Also, It says it's been a century since corporate bonds have outperformed government debt like this. What was a, quote, 2 plus 2 equals 4, unquote, economy from the 1990s to the 2010s, i.e. 2% growth plus 2% inflation equals 4% nominal GDP growth, is now a 2 plus 4 equals 6, unquote, economy, meaning 2% growth plus 4% inflation equals 6% nominal growth, nominal GDP, said Bank of America strategist led by Michael Hartnett. The most recent GDP report covering the first quarter saw 1.6% real GDP growth and 4.8% nominal growth, but nominal growth did average about 6% last year. This strong nominal GDP growth is the catalyst for a big bear market in bonds. All right, you're hearing this, right? As well as what they say is an, quote, anything but bonds, unquote, bull market in credit, stocks, and commodities. Stocks SPX are in a late secular bull market with no change in leadership since 2009, no recession to change it, and with valuations inconsistent with a new bull market, they say. Commodities are in an early secular bull market driven by debt deficits, inflation, AI, climate change, and reverse globalization with the U.S. import tariffs, the highest since 1971, they add. But Hartnett and team say the 3 Ps of positioning, policy, and profits argue for a reversal of the ABB trade in the second half. On positioning, no one is long the 30-year, which means it's the obvious pain trade in the second half. We're going to stop there on that one. So now let's move on to a little bit of silver news. Just a little bit. A wee bit of one of my favorite commodities, silver. I love gold, but I also love silver. Silver price makes a move above $30. At the time of writing this article, of course, I don't know what it's doing right now. Analysts say it's just getting started. That I believe. Yeah. Silver has a lot of potential. It says after a relatively slow start in the first quarter, silver is making its move, significantly outpacing gold as it trades at an 11-year high. Just ahead of the weekend, silver prices have broken above $30 an ounce. July silver futures last traded at $30.74 an ounce, up nearly 3% on the day. By comparison, gold is trading at $2,406, up 0.88% on the day. Soaring silver prices have pushed gold-silver ratio below 80 points, and it has been traded at its lowest level since August. I'm long silver. Well, first of all, we got silver really, really low, but I'm a long-term holder of silver. The short price action is very, very good. I'm hoping it stays up, but I expect it to do much greater things in the future, but we shall see. Quote, silver does not look overheated as it is only now entering overbought territory on the RSI on the daily timeframes, unquote, said Alex Kupsikovich, FX Pro senior market analyst, in a note on Friday. Quote, last month, silver was actively added for another 3 weeks after the RSI entered levels above 70. A 2-week pullback in the second half of April later removed that overbought area. Technically, this clears the way up, unquote. Kupsikovich added that his near-term target for silver is $33 an ounce. However, he added that the precious metal could make a serious move to its all-time high of $50. Long term, yeah, like I said, I could see that happening. This is, quote, long-term trend. There you go. Long-term trends are also on the bull side. See, I know my stuff. I know a little bit. It says in the last 2 years, they have been able to quickly turn the price to the upside after dips under the 200-week moving average. This year, the price is successfully pulling away from that line. But the most furious part of the rally may be ahead, unquote, he said. Quote, silver could be ready to repeat the growth spurt it showed in 2010 to 2011, unquote. All right, so hope you all have a fantastic Friday evening and an even better Saturday morning. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, everybody, let's get to the money.